Well, hey everybody, welcome back to Eating the Elephant on Wednesday. This is 61st episode, I think. And for those of you unfamiliar with Eating the Elephant, it's where we take the storm, the recovery effort that is Hurricane Michael, this big elephant that we've all got to eat, and we break it into bite-sized pieces for you. We talk about insurance information and some general recovery info, and we answer mostly the questions that I've gotten over the last several days. Wanted to start with a couple of things that are pretty simple. I want to kind of go back to last Sunday, because I talked exclusively last Sunday sort of about financial recovery and about planning for the next storm. And what I talked about, mostly for those of you that are not familiar, is sort of how to prepare, how to get your financial records ready, how to store them, how to protect them, and how to keep them accessible but safe. And if you want to go back and look at that, there's also a post which gives you kind of a checklist. And if you want to look at just the posts on our Facebook page, it's there in a text format if you don't want to watch the entire 15 or 18 minutes that we did last Sunday. I do want to build on that a little bit because I found something online that I thought was pretty helpful, a little more extensive than what I had put together. And if you want to Google the FEMA EFFAK, EFFAK, and FEMA has put out a document called the Emergency Financial First Aid Kit. It's got a lot of information that I didn't include. I tried to make mine for a very general audience. For instance, I didn't talk too much about people with special medical issues or special needs. There's an awful lot of information probably about pets that I didn't cover. So if you have special interests in particular considerations that you need to think about for the next storm and potential evacuation, I might not have gotten to your issue. So what I would say is take a look and look at the Emergency Financial First Aid Kit from FEMA. If you can't find it, shoot me something and let me know. The other thing I would say is I got a stunning number of emails and direct messages asking for copies of that list that I posted on Facebook, the checklists and things like that. And I have to admit, I may have lost track of somebody along the way because messages were coming in kind of at different times. And what I would say to you is if I didn't send something to you, please reach out again. I might have missed something. I might have missed your direct message or your email or your text message. And I apologize. I probably wasn't as well organized as I should have been. But if you'll reach out again, I promise I'll shoot it to you within minutes, most likely. I wanted to come back to something I've said over and over again, but it bears repeating based on some of what I've heard over the past several days. And in the general theme of this, I'm gonna loop several things into one little bucket here. It's get your own guy or gal. You need to have people that are exclusively on your side that are looking out for your interests. There's lots of people that claim to do that, but very few people do. The best way to make sure someone is working on your behalf is they're working for a fee. They do not have a financial interest in the outcome of your project, of your construction, of your home, or of your insurance claim. People that have a financial interest in your claim or in your construction project have their own motivations, and they need to have your motivations at center. I've talked about various types of people. I've talked about third-party inspectors, which have been an absolute blessing after this storm. People like Craig Lemire and Steve Horde. There are many in town. For a flat fee, they can help you with things from getting a new wind mitigation form together to get good discounts on your insurance, to making sure roofing was done properly, to helping you decide whether something should be sort of painted over or torn out or could be repaired versus replaced. And they have no financial stake in that decision. All they care about is giving you the best advice they can. We've talked about engineers. People like Mike Weber has been very effective. Getting your own engineering consultant, particularly when the insurance company has brought one in. If you feel like you need to challenge the engineering report that was brought forward by your insurance company, get your own guy, like I just said. When you're going, there's an awful lot of people being pushed toward appraisal or pushing their insurance companies toward appraisal. Get your own guy. Get somebody like a John Robeson who can help you and who can be neutral, but who can be clear, who can be factual, and can let you know exactly what needs to happen, and they can back up what they say with a work product that's well documented. So again, get your own guy. Now, I'd like to say I think it's kind of, for those of you, I use sports metaphors on occasion, I think it's free agency now. It is now free agent season, and I think it is time for all of us that have been through this and that are still going through this to consider remaking our teams. There are people that I dealt with prior to the storm in a business sense that frankly I've ceased doing business with because of their behavior and because of some of their profiteering. I've also brought on new people onto my team, and I've learned to trust them and I learned to have some faith in them. And some of that is just because they have performed very, very well, and I maybe have not been familiar with them before. Whenever I need a service, I tend to go to my client files first and find out who we insure, and I tend to start there. But there have been an awful lot of people from out of town that I don't know, and I have had to wait and see how they actually performed. You see what some of their referrals are like. You sort of see what their clients say about them. You see who you think are posers, and then you find out who really performs and who really knows what they're talking about. We've been here long enough now, we're 9 months in, that it should be relatively easy to figure out who the good guys and the bad guys are. It's not always still possible, but we do have enough history with a lot of these people, whether they be attorneys, PAs, contractors, that we have gotten much better, I think all of us, at recognizing the black hats from the white hats. So what I would say is, use this period of free agency to reorganize and to remake your team. Maybe you need to draft some other people. Maybe you need to have some releases and send people to the locker room. But look at people not just like the engineers and the appraisers and the inspectors. Look at your contractors again, whether that be a general contractor, a drywall guy, a painter, your yard guy, your insurance agent, your physician. Anybody who has performed well after the storm should be kept, should be treasured, and anybody who has underperformed, perhaps it was somebody like the person didn't repair your tire properly, or maybe they did a great job and they were able to do it quickly. Maybe they couldn't repair your vehicle, or maybe they managed to work you in and they really did a good job at a fair price. Maybe it had something to do with the work on your home, or maybe it was a medical need. It could be almost anything. But I think it's very important that all of us remember the good players and the bad players, and to put all of the good players on your team, because you may need them again. Even if hopefully we never have to call on them after a storm, it's good to have them there, and you need to make sure you've got their contacts in your phone and ready to go. Beyond that, we've talked an awful lot about homeowners insurance, and we've talked less about some other kinds of insurance, and I'd like to mention a couple of things. I have mentioned flood insurance before. I haven't really pressed it. We've talked mostly about the 50% rule, and I have not really impressed enough on people, I think, the really, really desperate need for flood insurance. There's been a lot of talk about this storm that's developed in the Gulf and is going to go into Louisiana. They're already flooding in Louisiana, and the storm hasn't even come ashore yet. They're looking at 8 to 12 inches of rain in some parts of southern Louisiana and significant flooding. Now, if you do not currently have flood insurance, it means your lender doesn't require it, or perhaps your insurance, perhaps your loan is paid off. If you are in a preferred risk zone, an X, an A, or an X, a B, or a C zone, you can get $250,000 in coverage on your house and $100,000 coverage on your contents for less than $500 a year. For some of you, that may seem like a lot of money, but that's really not a lot, because if you can put, say, 6 inches of water in your house, 4 inches of water in your house, all of your flooring is going to be gone, a lot of your furniture is going to be shot, all of your baseboards, the first 4 feet of your drywall are going to come out. You may have some electrical issues. There's no telling. Cabinetry may have to come out. That's very, very expensive. So I want you to give some serious thought. I have to tell you that we recommend flood insurance to every single one of our clients, and if you don't buy flood insurance from us, generally speaking, you have to sign a form saying, I understand this is valuable coverage, I may need it, but I don't want it. Because we want to be very clear with our clients how important we think it is. And I think there's probably a way, if you have a good agent, if you will sit down with them and express your concerns, you might be able to move some premium dollars around and shuffle your coverage maybe on your home or your auto, life insurance premiums, things like that. And you may be able to make flood insurance essentially free. You may be able to save enough money per year on your other insurance needs to put flood insurance in place, and we think it's that important. So I would encourage you to do that. Two other kinds of insurance that are not big deals to a lot of people, but they can be significant. One is sort of what I call special items, personal articles of special value. Things such as jewelry is, of course, the number one. A lot of us, I'm a gun person, I like guns, and a lot of people have more than one, and some are very expensive. But you have jewelry, guns, furs, certainly not an issue here in Florida. I don't know a lot of people that wear mink in 90-degree weather. But an awful lot of us don't think about this. You might, maybe you wear a nice watch, maybe your wife has a really nice engagement ring, maybe you got a really nice piece of jewelry as an heirloom. Those kinds of things, generally you're going to be dissatisfied if they disappear or something happens to them and you get paid under your homeowner's insurance, because generally you're going to be limited probably to a recovery of $1,000. If you've got a wedding ring that's a wedding set that's say $4,000 or $5,000, and it slips off your finger if you knock the stone out, or let's say you leave it in a dressing room, which happens a lot more often than you'd think. Those are the kind of things that you need to think about, and you can insure those very, very inexpensively. The other thing that's come up an awful lot lately is a little bit more of a liability exposure, and it's golf carts. Everybody, it seems like, is driving golf carts lately. Electric vehicles, the roads are much more friendly to them. Golf carts, if you are on a golf course, and the wording in the policy is for golfing purposes. So if you are going from the clubhouse to the first tee, from the 18th green to the 19th hole, you're going to be covered usually as part of your homeowner's policy. But as soon as you leave that, if you live in Bay Point, if you live in the Panama Country Club, the Ombre, and you have a golf cart you're riding around in, that's generally speaking not going to be covered, and it's not going to be covered under your auto insurance either. So for $50, $60, $70 a year, you can cover that kind of exposure. The other issue that we've seen an awful lot, I live in Lynn Haven in the country club, and I'll tell you, we see kids all over the place running golf carts all around on the roads out here. They're public roads, they permit golf carts, but I think, as we all know, the younger kids, teenagers probably don't drive, they don't drive quite as responsibly. I can't tell you the number of times I've seen a golf cart full of kids blaze by my house to go to the pool with 2 or 3 kids hanging off the back. A good friend of mine, Danny Russell, he had his son just recently break his arm because he was skiing on a skateboard behind a golf cart and lost his balance and came down pretty hard. So those are the kinds of things that people don't think about. And why would you not want to cover that exposure for $50 or $60 a year? It's just so inexpensive to have that peace of mind. I wanted to address an issue that has come to me kind of, I think, from people whose motives are a little suspect, are the people that have come to me. But I did want to address it because I think it's a fair question. We're at the point in the process of hurricane recovery where people are thinking that insurance companies are delaying on purpose. Now, if we leave aside whether we believe that or not, there's a particular purpose in mind. Some people claim that insurance companies delay payment in order to gain investment income. They want to save the money in their pocket so they can get interest on that money. Well, I think we can debate whether some insurance companies intentionally delay. I think there are those that are bad. We have insurance companies that behave badly that I think undoubtedly delay payments that they should make a lot more rapidly. In this storm, I wish things had happened much, much more quickly. And I think, based on what I've learned, I really do think it will happen more quickly after the next storm because of what has been learned. There are those players in the game that do behave badly and I think do intentionally delay. I will tell you this, I cannot imagine for a moment it is due to interest income. And I'll tell you why, because insurance companies are very good at math. And if that was your motivation, you'd have to be really, really bad at math. And I'll tell you why. From the storm through May, Xactimate, which most of you know is the software that's used to estimate home prices and rebuilding prices, those prices went up 28%. You can argue whether you think that's a good number or a bad number. Frankly, I think it's probably a little lower than it should be. But if your pricing went up 28%, and let's say you're making 8 or 10% on your money per year, well, half of that is 4 or 5%. So if you delay 6 months, you're going to make 4 or 5% in interest, but you're going to lose out 28% in the cost of doing the repair work. So I don't think that makes sense. Insurance companies that delay tend to have some of the highest expense ratios, and I think they spend a lot more money than they should, because in addition to this increase in price after a storm, they have to handle a claim over and over and over again. The highest expense for many of us that are in business is the cost of our people. Those of us in the service business, the service is the people that provide that service to your customers. It is the number one expense in my office is the cost of the people that I hire. And so every time an insurance adjuster has to touch a file and has to go through, has to make a phone call, has to follow up, that's time and that's money that an insurance company is spending. That if they've done that 6 or 8 or 10 times, or they've drugged their feet for 4 or 5 months, it doesn't make sense because they're spending money that entire time. If they'd handled it up front, even if they'd overpaid on the front end, it would have made more sense for them financially. In my opinion, that's what some of the better insurance companies did is early on, they may have overpaid some claims or paid them properly, either one, in order to get them out of the way. And I think they were willing to take the risk of overpayment in order to have it done and over with, and then they didn't spend money anymore on just churning that claim and spinning it in the system. It didn't make sense to me. I still don't think it makes sense at all. Going back to Hurricane Opal, our lead insurance company was a company called American States, and they were one of the best in the business. They've long since sold, but they came in, and their sort of corporate perspective was to come in, and they wanted to overpay their claims on average 15%. And what that did for them is that got them here. They were able to pay, and they were able to get the claim closed, a happy customer, and they were able to take all of those people that were staying in very expensive hotels, driving around, churning up expenses, and they were able to send them home. They were able to put them back to their regular jobs, doing their regular thing. And so if they overpaid everything by 15%, they still came out ahead. And that's what I've been trying to portray to people both in and outside the businesses. I'd rather risk overpaying clients on the front end, making them happy, and everybody go home, than drag this through the process. And I think we're dragging this thing a little bit too far through the mud now. So I think it's on all of us. That I think it's become very important that we all understand that the system is a little bent. I don't think it's broken, but it's bent, and it needs to move much more quickly. After a storm as devastating as Michael, or even a Katrina or an Andrew, I got to be honest with you, I don't know that that's possible. I do think that what we've learned from this storm is going to help the industry. I think the technology that is coming is going to make the people in the next community that were affected like us have a better result. And as much as I'm sorry for what's happened to our town, I am encouraged by what I've seen everybody do from a recovery point of view. And I'm hoping this experience, both for clients, both for insurance companies, construction providers, I hope we have all learned lessons that we can take forward and make this a better experience next time one hits, because it's going to happen. I would ask that everybody say a little prayer for the folks over in the Louisiana area that are going to have some really bad weather and some flooding. Think about them. If you're in a position to help, and if you are involved with a nonprofit, I hope you will encourage your people to deploy, because I think they're going to need the help. Not that we don't, but they're going to need it as well. And they're going to need a different kind of help, I think, than we do. So maybe the people that are the sort of first response types that maybe are not as needed now can maybe help over there. I do hope everybody has a good rest of the week. I hope you, again, enjoyed your 4th of July weekend. I'm sorry it's going to be an awful lot of rain for the next few days, but maybe you can curl up on the couch with your family, enjoy yourself, maybe cook a good meal together. And we will see you, as usual, on Sunday. Thanks.